Hello guys, welcome back to my channel. This is going to be a second video on my YouTube channel. Today I will be analyzing silver and but yeah, so today we're gonna do a little bit of seasonality analysis, and then we're gonna do COT, which is commitment of reporters. It's something you really have to know as a trader. That's why if you guys want to know more about that, I could make a video specific for that. And yeah, just comment down below and let me know if you guys want another video of that of CO2 reporters. And then I will do a little bit of demand and supply zone analysis, and then hopefully place an order. So before I get it started, I have to acknowledge the fact that I'm actually a learner, and I learn a lot from YouTube and other places. And there's this guy on YouTube, Bernd Skorupinski. Shout out to that guy. He taught me a lot. And yeah, let's get it started. First thing I want to do before I place an order, before I start trading, I want to look at the big picture. And how would I do that? By analyzing the seasonality. So seasonality is more of like a pattern that, you could, it's more of like a pattern where you say, all right, what happens to silver every July of every other year? And then you're gonna look at the statistics and say, all right, there's a higher chance of this happening. Or you could say like, oh yeah, silver is gonna be bearish this month because it's been happening like that. Because silver is more of like a it's not just gold. Silver is actually heavily used in most of the industries. So there's going to be a lot of commercials, buying in or selling out. There's industrial companies actually managing silver. So there has to be a little bit of seasonality. Like, oh yeah, it's the summertime. Is silver has silver been heavily used this summer? Stuff like that. So yeah, you could literally can look at the big picture and analyze it. So, and how would you do that? You could literally do it through the charts. If you go down, if you look down to the left side, you're gonna see that my timeline is in terms of month. You could literally change it so it's in terms of month. You can analyze it. I'm gonna keep it that way. And then, as you can see, it's 2026 July and forward. Now let's go back to 2025 July to September, or August, late August. September, now we got July and September 2025. I am gonna have a vertical line starting from July 1st. I want to create another one just so you guys know what I'm talking about. Alright, so 2025 July 1st to September 3rd. The market has been a little bit bullish. So market has gone up in September. And then we're going to go to 2024 July to September or late August and see what the market has done. I'm going to do a vertical line again. July. What we actually have to do is late July, but it's fine. Because it's 28th, I believe, today, September 1st. As you could see, the market has been bearish. 2024 July to September. (2023), I guess. So I am gonna do vertical line. It's August to September. So market has been bearish. So you could literally go back to, I don't know, like back to 20 years. I guess you could literally do this manually, but I don't want to do it manually because I am a smart person. So you could literally use AI or ask it from Google, and it's gonna let you know. And I did Google it, and it says silver market starting from late July to early September, statistically speaking, it's bullish. So market is going to go up. So you could literally look back to that day. So the big picture is that silver is going to go up starting from August all the way to early September. Now we know that. Well, what we have to do is we have to do analysis of COT, commitment of reporters, and how you're going to do that. It's important. Now look, guys, if you guys look down below, you're going to see this draw button, and there's this graph button next to it. This is you could literally pull up any indicators. You're going to go to the search bar, search, and you're going to say COT index. This is what I use. There are many other options. COT index. I go with Dixon Chai. I go with this guy, Dixon. I pressed on it, and it's added to my graph. As you can see, it's COT index futures only. One more thing you have to know. You can't open COTs on, I'm going to delete them. You can't open COT on silver spot itself. You have to open it in futures, because COT is commitment of reporters. It literally opens in futures. So that's something you have to know, and it has to be in weekly charts. So I'm going to go to the timeline and change it to weekly. Yep. So here we go. Now we did open COT, and you might be wondering what these three lines are. I will be explaining them. Let me just go to the settings and actually get rid of non-commercials. Retails, we gotta keep them. Yep. We gotta keep them. I wanna make them red. And explain what. And I'm gonna explain what I've done. Commercials, yep. It actually has to change, but it's not. So something is happening, I guess. Show retails, yep, I forgot that. Show retails too. So there we go. So now we have two of these. This yellow line actually represents the commercials, big commercials. What do I mean by that? Commercial traders are actually big companies, like companies that actually mine silver, or companies that actually buy silver, like Apple, or any other electronic companies. So these are actually categorized as big companies, commercials. And then there's retail traders, this pinkish line, and that is going to be us, actually, retail traders. And there has to be another line, but I don't want to add that yet. It is non-commercials, that is big institutions, big banks, hedge funds. They also play in this game too. Why do I need these two lines? These actually represent what the big companies are doing, like industrial silver companies are doing. And then there's this pinkish line that actually represents us, what we are doing as retail traders. And there's something you have to know. It's better that we shouldn't go with retail traders, because most of the time, statistics speaking, they're wrong. So it's better you act the other way. And this there's this percentage. It says 70. If you look to the right side, you're gonna see that for yellow line it says 72, and for the pink line it says 46. What is that? Good question. If you guys know it, just pause and comment. But I'll explain what that is. That's actually the confidence level, I'm gonna call it that way, of specific groups of people. So let's say if it's 72, that commercial traders are actually confident enough to sell. And then 42 is a little bit low. For retail traders, they're hesitant. They're not trying to buy. They're just they're just waiting, I guess. So if there's a thing, if it goes up to 75%, that it's literally that the market is confident enough to buy. If it goes below 25%, it says, all right, market's panicking, they just don't want to buy, they just want to sell. So right now it is kind of interesting because commercials are kind of confident enough to start buying. They're confident enough in their position, but retailers are not, as you could see, because it's 46%, so it's not really changing. But if it went all the way down to 25% for retail traders, that means retail traders are actually panicking so much that they're just trying to do everything to get out of the market. Now there's this thing right here, as you can see, it says value, there's symbols, there's com law, commercial shorts, commercial longs, net position. I'll explain what that is. And if you guys, alright, I could literally make another video on this one, but generally speaking, as you could see, commercial market is they're actually having a lot of contracts for long positions actually buying, and short positions they're selling. So there are more. So what you can see is that 72,503, and there is 32,050 contracts. I'll explain what that is. That means there are commercial companies who are actually trying to sell. There are commercial companies that are actually trying to buy. Because obviously commercial companies who are actually trying to buy are actual Apple, Samsung, and other companies. Commercial companies that are actually trying to sell are mostly industrial companies like silver mining companies. And as you could see, there are more sellers in the market than there are more buyers. And it's in terms of contracts, by the way. I don't know the specific numbers. I could literally look it up. So what I mean is, in the market, there are more sellers right now. There are more selling contracts than there are buying contracts. So it's something that you have to consider when you are trying to place an order. And now you have to ask yourself a question and say, when will the commercial companies wanna sell? Because there are majority of the companies that are trying to sell. They want to sell. They want to have a selling contract when they think that the market is going to get to a point where they're confident enough to sell. So, do you see the picture? We looked at the seasonality. Seasonality said, all right, market is going to be bullish starting from late July to early September. Good. Now, there are a lot of companies that, by the way, the commercial companies, they have not sold yet. They have a contract that says, I will sell it by this time. So they have expiration date, they have a contract, but they have not sold yet mostly. It's just a contract. It shows the contract number. And think of this for a moment. Let's say you are a big mining company and you do want to sell. Why would you want to sell? Because you do believe that the silver price is going to go up at a certain point. Let's say within a month you think that the silver is going to go up. And you just, what you do, you're going to do a selling contract. So it's another confirmation that silver is going to go up. Now we're going to go to the mass trader. This is where I want to place my order. By the way, it's a demo account, so it's not real money, which I think is fine for most of you guys. For me too, because as I said, I'm a learner right now. I'm just not. Now we're gonna go to the silver chart. I'm gonna change the timeline to daily. As you can see, silver is kind of going bearish right now. This is what I've done. This is where I said, all right. Now I do know the fact that silver is going to go up at some point because of the COT and seasonality and stuff. I have to know where I want to buy it, because, all right, if I know something is going to go up, I want to buy it and sell it when the price goes up. I have to place an order, but where? Probably somewhere at 51%, because if you look down to the left side right here, you're going to see a demand zone right here. Right over here, it's where the demand zone is when, let's say that the price of silver goes down to a specific number and everyone wants to buy, and it's around $51, because it has happened literally twice in the past. So I'm just waiting for the market. I'm waiting for the silver to go down to $51, and then I want to place my order. Did you guys get the idea what I'm talking about? And I'm gonna do a long positioning for that. I'm gonna do a long position right here. Now I know where I want to buy. I have to place my stop loss somewhere here, and I have to place my take profit somewhere here, and I'm gonna explain why I do that. So now I know that, when the price of silver goes to $51, I want to buy it because, seasonality says it's going to go up, and the big commercials are betting that, it's going to go up. And supply and demand zone, I looked at the chart, and, right here, right over here, as you could see, it's a demand zone because a lot of people want to buy it when it goes to $51 because it's cheap enough that it makes people to buy. And that's why it's called demand zone. Because, you don't want to buy when it's $57. You know what I mean? You want to buy it when it's cheaper. And it's at $51. Now I know where I want to buy. I have to, do a risk management somewhere at $4 to $5. Why do I do that? Because if there's another demand zone right there. If it literally breaks that demand zone, goes all the way down, then yeah, I'm gonna give up and say, yeah, it's going to be bearish all the way down. That's why I'm gonna put that stop loss right around $45, and my take profit is going to be somewhere here. Because I'm gonna look to the charts and say, where is the horizontal line? As you could see, right here around $62, there is a supply zone. At around $71, there's another supply zone, or it could be demand zone. So I'm actually betting that if the silver comes all the way down to $51, it's gonna go up, because it's cheap enough that actually makes a lot of people to buy, to make people buy. And I'm betting that the market is gonna go bullish. It's not a financial advice, by the way, guys. I'm not saying, you guys got to do what I do. But this is literally what I've been watching. I believe it's true. Actually, you know what? I'm gonna change it to here. Yeah, it's good enough. It's good enough. This is what I've done. Yep. I'm betting that the market is gonna do it. And all right, let's go through a bunch of stuff that we've done. So we have done seasonality and find out that it's a bullish market coming up. And then we've done COT, and we could see commercial markets are actually selling at some point. They have a selling contract, and they want to sell it when they believe the market is going to go up. So another confirmation now. Now we have what we have done is we have placed an order right here, and all we have to do is just wait for the market to come down to $51 and then see what's going to happen. And I'm actually placing my take profit right around $71, because as you could see right here, it's where the zone is, and one over here. And I do believe it's going to break this one, 62%, around $62 zone, go all the way down, all the way up here. And as you could see, my risk to reward ratio is a little bit good enough. As you could see, my risk to reward ratio is 3.75%. That's really good, actually. So that means if I actually risk $10,000, I'm gonna be making profit of, I'm gonna make profit I'm gonna make more. So I'll explain what the risk to reward ratio is. So it's like if you risk $1, and let's say your risk to reward ratio is 3-to-1, it means you're gonna risk $1 for $3. If you lose $1, you're gonna make $3, I guess. Yep. I think it's gotten to a point where my brain just cooking, so I'm gonna just end it here and see you guys later. Yeah, just comment below down the comment section if you guys wanna know more about COTs. I can make another video, because COT is something really important for you guys. I see you.